If you have been investing in the US stock market, 2022 isn't a good year so far. In January, the US stock market has been down all the way, especially the high growth stocks due to the fear of inflation. And this is very different from what US stock market has been performing for the past few years, been rallying a lot, and this caught a lot of investors by surprise. So if you are nursing a very big loss at the moment, I have 10 ways that you can handle this market crash better depending on the context that you are right now in. I'm Alvin, I'm the CEO of Dr. Wealth, and I'll start this topic with the first point, which is if let's say you have been doing a lot of dollar cost averaging, that means you buy into investment over time. Every month you put in say $500, and in this market crash you might be worrying that should you continue, right? You should, because the cheaper the prices go, the more you can buy, the more shares you can buy with the same amount of money, right? So if let's say the share price is $1 and with $500 you can buy 500 shares. If the share price go down to 50 cents, with $500 you can buy 1,000 shares. So the key thing about dollar cost averaging is that you should not give up, especially when the market is going down, because dollar cost averaging work very well during a downtrending market. But on the other hand, lump sum investing works better on an uptrending market, right? Because you put a lot more money before the whole thing goes up rather than you spread out your money. So remember, if you're doing dollar cost averaging, you should continue to do it when the market is downtrending. Okay, for point 2 is for those who are currently worried about your positions, right? So maybe you can't sleep well at night, you're worrying about your position, and you're checking your share price every few minutes, you just can't concentrate at work, and it just tax you mentally and emotionally a lot. Then I think it is not worth it, and it is a sign that you have invested beyond your psychological capital, right? That term is invented by me. That means it is an amount that you cannot psychologically handle, and it affects your day-to-day life, right? I don't think it's worth it because money is not everything, and health is a lot more important. If you have no health, how are you going to enjoy the wealth that you're going to have? So if you're worried about your position, it makes sense for you to take off some of your position in the market, right? Sell something, even if it's a loss, at least you reduce it to an amount below your psychological capital, you can regain back your life, right? So I do think that that's important. If there is a loss, no choice, right? Because it's just emotionally too taxing. Reduce it and you might feel better. And the third point is that stock market is not the only place where you put your investments in, right? It's not all your assets are in the stock market. Nobody actually does that, right? You will have your own house, you have your CPF, you have your bank deposit. Just want to take you through the average Singapore household asset breakdown, right? If I may just pull out the chart. And the amount of assets that's in housing, that's the largest proportion for majority of the Singaporeans, right? It's about over 40%, okay, of the assets are in property, okay? So which means stocks are not the major ones. If stock crash, your net worth is pretty much intact, and 20% is in cash, and another 18% is in CPF, and 10% in life insurance. You might be shocked to hear that the average Singapore household only have 4% of their assets in listed securities. That's just 4%. So even if the stock market crashes 50%, you only drop 2% in your overall asset, right, level. Okay, so it is not something that is scary. Okay, stock market crash, we read the news, it might sound scary, drop a lot, but if you zoom out and look at overall net worth or your asset breakdown, you might be surprised that it is not a significant amount in your net worth itself, right? So I do think that one way to help you to look at the big picture, zoom out and look at overall net worth. Okay. And number 4 is that if let's say you are someone who has always been very conservative, have been very prudent with your investment, you are always thinking long term, you buy something that you have the intention to hold over a long period of time, naturally along the way you will meet some correction and some crashes because your time horizon is long, right? So naturally you will encounter some of these unfortunate events. And if you have done your homework and you're very sure that you have made the right investment choices, then you should not be worried about it because your horizon is so long. Eventually you will go through the entire crash. When the recovery comes, you'll be there, you'll be well positioned, and you can enjoy the bull run again. So again, stretch out the horizon and look bigger in terms of that picture, right? And also, ask yourself, be honest with yourself. Have you really done the due diligence when you select your investment? If you have done so, then just carry on. Okay. And number 5 is to get rid of your speculation. So this is opposite to those who are, I mentioned in the previous point, right? So there are investors who have been speculating all the time, and the intention is not to hold long term, it's just to make a quick buck out of investment, right? You just hope that you buy something and next week or next month, the share price go up significantly so they can take profit. But unfortunately, you're caught in this crash. Okay, or caught in this correction, and instead of looking at profits, you're now looking at a much deeper losses than you have expected. And this is what I would say time to correct your mistakes, right? Because when you go into speculative stocks, right, it is not true that holding long term they will recover, because some of these speculative stocks will never recover to even the price that you have bought them in the first place. So rather than waiting in vain and eventually still have to sell your stocks at a loss 5 years, 10 years later, might as well sell them now and be more conservative and prudent with your investment going forward. So that's my suggestion, right? Again, you need to be honest with yourself, whether you have been speculating or whether you have been investing. And with that knowledge, you should be able to take the right action. And number 6 is, if let's say you want to take advantage of the crash, right? But you have no cash to buy, and you'll be wondering, okay, so how should I adjust my investment? Again, review your portfolio, look through all the holdings that you have, and there will definitely be some that you don't feel as confident to hold them for a long term, right? And you might find some better candidates that are now selling at very cheap prices, because I do know there are investors who keep a watch list of stocks that they always wanted to buy, but the valuation are just too high. And during crashes like this or corrections like this, that's where the opportunities present themselves. And you just compare, right, against the portfolio holdings that you have and the ones that you want to buy. And if the ones that you want to buy are more attractive than some of the holdings that you have currently, what you do is that you sell the current holdings and you buy those that are of better prospect, better valuation. And now you take the opportunity to rejig the entire portfolio setup, and you aim to build a better portfolio at the end of the day. And number 7, let's say you want to take opportunity of the crash and you have cash. Okay, so that is the most advantageous position, but don't waste it. And it is very common that when the market is crashing, there will be a lot of fear. Even if you're holding cash, you'll be wondering, is it a good time to go now? Maybe I should wait a while more, wait for the rebound a little bit, I try to catch the bottom. The fact is that it is difficult to know where the bottom is, and it is only obvious after a while, right? And after the market has really rebounded quite significantly, then you know where the bottom is, and which means that you need to get in at some point in time, right? And how I would suggest people to do it, right, is that especially if you are an individual stock picker, you should look at the stock's valuation. If they are to a price that it is cheap enough, right, just get some, just go in and buy some, right? Don't wait until the whole rebound comes and you just miss the entire crash to buy at a very good prices. And number 8, if let's say you are someone who invests for dividends, okay, you focus more on the cash flow from your investment rather than the capital gains and losses, right? Then in periods like these, crashes or not, you should not be worried, because as long as there's cash flow going to your bank account, dividends credited to your brokerage account or whichever accounts you're using, you might even be using them as your living expenses, right? As long as that dividends don't get cut, okay, as long as your income is not affected from your investment, then don't worry about the paper value, right? The mark to market value of your investments. That's secondary. Most important is as long as the cash flow is flowing. And when the market rebounds again, your whole net worth will come back up again, right? So not to worry about that. And second last one, okay, number 9, is that if let's say you are not a stock picker, you have invested in a portfolio of ETFs or unit trusts or funds or whichever, usually these portfolios are well diversified. Okay, assuming they are well diversified, then you're actually betting on the general market, right? And if you're betting on general market, you'll be sure that the general market will eventually recover. Okay, we cannot say for all stocks, right? If you pick individual stocks, some stocks may not recover to their previous highs or even to your buy price. But if you buy the entire market, it is almost guaranteed that the market will recover at some point in time and even go higher when the bull run resume. So you should have more confidence to hold on your investment, and you don't need to take the trouble to review your holdings, etc., because you're buying entire market already, right? So again, put things in right perspective. You should be able to live with this kind of drawdowns a lot easier. And then the last one, my suggestion is that if, let's say, after what I've mentioned in the previous 9 points, you're still concerned, you're still worried, and I do think that you should talk to somebody, right? Maybe someone close to you who understands you better, who will listen to you. Or if you're using an advisor, you can talk to your advisor and ask about your portfolio. Are you doing the right thing? How should you approach this? Is there any advantages that you can take at this point in time? Or you can also join community, right? Investors, and you can talk to other investors, and you'll feel better after a while that there are people in the same boat. Okay, you're not the one that's alone, and they may have good suggestion how you can handle such market crashes better as well. All right, so I hope that during this tough period, this video will help you depending on your context. I hope I will address your context and not leave any stones unturned, right? So I hope you like the video, like this video, and subscribe to the channel, and I'll see you in the next one.